All right, guys, welcome back for another video. I know the title of this video is a little bit ridiculous, but you know what? So is the sentiment in the market right now. So I feel like I need to match them in some way. So anyway, I just want to, kind of zoom out and focus on the big picture. Again, I know I sort of am like bringing up the same things over and over again, and I'm kind of cognizant about that, but I do also want to hammer them home because they are very important. Um, so again, we're retesting the all-time high, but the reason why I'm looking at the RSI in this perspective is to show that RSI is most extended on the weekly chart than it's ever been in its history. It's never been this extended. Again, the only time it was that low was before, just coming out of its inception. So, this was the lowest low on the RSI back during the 2015 bear market. We kind of approached it during the 2018 bear market. And then here in the 2022 bear market, we surpassed it and got even to more extreme. Now, why is that interesting? Why is it interesting at this level and at the all-time high up here? Well, again, the opportunity to buy a retest of the all-time high after running up here, most people would consider to be a monumental opportunity. But of course, you get there and it's not the same opportunity as it used to be. People don't perceive it that way. But what is happening here is if we just zoom out, well, we've got the all-time high right there. And we see divergence being put in right here, right? So the, price came down to this level, right? And then now price is going beneath it. You have this low right there, the low in RSI, and then RSI is pushing beneath it and forming more divergences. Now, I know these divergences aren't confirmed, but it is something worth paying attention to, right? It's important to notice that these divergences are being formed while the sentiment of the market is, expecting like a major capitulation off this level, which is just not what we're seeing in the technicals. What we're seeing in the technicals is, an indication that this area is acting as support, and buyers have shown a willingness to act as, to buy at this level and to bid the market up. It's very common for, buyers to step in at a level, push the price up, and then for price to retest that level, which is really what we're seeing right now. So again, again, the sentiment is incredibly bearish. I actually don't think I've ever seen a time in the market when sentiment was this bearish. But now that I've started on the high time frames, let's go down to the lower time frames. One last thing I want to mention about the weekly RSI is that the RSI is most important and most significant at extremes, right? So you don't want to look at divergence within the center of the chart. You want to look at it at the extremes, right? When it gets very high like this, right? You have this divergence right here, and then it confirms that divergence, and then you get the breakdown. Well, RSI is at extremes, right? So same thing here. Anyway, we got the daily chart, and you're seeing the same. Look, we got the same type of divergence being put in at this level right here. You got one drive there, break up, another push down below, and you've got your RSI being put in. Now, again, I know it's not confirmed. You would want to see, a confirmed low being put in here, which, you'd want to see a close above this level right here. The high put on from FOMC, you'd want to see it close above there. And again, we haven't seen that yet, but so it's a little bit premature to be, calling anything right now. It's much more prudent to wait for confirmation. But kind of the, what I had been looking at that gave me a little bit of confidence that, this was the level to be looking at is the volume coming in here. So again, I won't explain why Coinbase is the most important chart to look at. You can see my position here, open from 18,325. But the volume is very, very significant here. So again, this is a historical extreme right here. This is very, very incredible capitulation and price action. And then now we saw that 12-hour candle that matched it, right? And that was on the FOMC data release. So I kind of want to look at the liquidity areas here. Again, remember, we're being, RSI is being wedged into, an area, right? We go out to the weekly. We saw that, there's just so many different drives of divergence. Price gets wedged into this area. Again, it's not perfect. You get one drive here, and then, another drive here. But if we just zoom out, you can see how, right? And then this drive confirmed above, taking out this high right here. So confirmed above, then drives. So this is the area in the market where everybody's psychology gets turned around, right? They're not really sure what's going on. And that makes sense because, this is a chop market around a high time frame support, right? So it's not like a bullish trend has established itself yet. It's just that, buyers are stepping in at the level, pushing price up and then pushing price down back into the level. And sometimes it's the same player doing that, right? Pushing, hitting market sells to push price into their bids, right? To fill their bids. And that's considered engineering liquidity. That's a whole different concept in itself. I can do a separate video on that concept. But I just sort of want to walk my way down. Again, we started at the high time frames, go down to the 4-hour time frame, see what we got here. Okay. We've got divergence also coming in on the 4-hour. Right here. This area to this area. Again, you can see how, you got a situation where the different time frames are showing you very similar reads, right? The weekly, the daily, the 4-hour, all the way down. They're showing you that this area is acting as support. People are stepping into the market and hitting the bid when the market sentiment is most fearful, right? And if you're following Twitter or you're following the sentiment in the market, you know exactly how fearful it is. Again, just walking down, go to the 2-hour chart. Yeah, you see similar distinction. But I did want to mark off the FOMC liquidity move. So I'll mark off this low right here. And then let's see. So you can see how, like, as the divergence is being put in on the RSI, it's coinciding with runs of liquidity, right? So I don't mind this line. That's just my position line. But price comes down, runs this low right here. And let's see if that's a divergence on a different time frame. Yep, that's a 12-hour divergence right there. So you can see this concept playing out. And then we have FOMC right here, where, let's go down to an hourly chart. So you have the start of FOMC right at this point right here, 1:30 New York time on Wednesday. And then you get incredible volatility in the market, right? You get, let's pull everything off the chart again. You get a run above the highs right after FOMC, and then a run below these lows right here, right? Just briefly, and then back up, then back down below these lows right here. Again, if we go to the 4-hour, you can see that the run below that low again was creating a divergence on the RSI. So we see the same pattern playing out right across different time frames. Runs for liquidity, people have stop loss orders below these lows. market drives below those lows, picks up those stop loss orders, and then big players are hitting the bids at those levels, and then we see it move up quickly from the lows, and RSI divergence be putting in after that. So we have the FOMC push up, push down, volatility is expanding, right? Stopping everybody out. This is actually very characteristic of what happens before a big move in price. So a lot of times you'll see, volatility start to dry up, and then it'll sort of whiplash a little bit, right? And pull liquidity from both sides of the market before, doing the real move. And, it's just a pattern that repeats itself over and over. You won't get caught up in it if you're not too, zeroed in on the current price action and you're taking a more holistic view. But, it is something to keep an eye on. We can also so really currently the current range on the low time frames is this range established by FOMC, right? Where FOMC, you had the open, ran above these highs up here, and then ran down for these lows down here. And you can see how we're kind of getting into this fractal nature of price, right? So we're going down. I'm making a very deliberate attempt to walk through the different time frames and show you how price is getting wedged into a corner, and the same patterns are playing out, in a fractal nature, right? So, and then you see price even on the 15-minute, right, get pushed down into this area right here. This, you could probably put a 618 retracement on it, right? So you have FOMC, you get a retrace up here. This is probably, a bearish retracement up here. You put a bearish 618 up here. Yeah. So it runs up in that retracement again. The golden pocket's a little bit above that, but then it comes back into a retrace here. And what happens there? You see the RSI put in divergence, right? Again, the same fractal pattern that we're seeing play out on every single time frame, right? So you get this low relative, to this low here. So this low is where the RSI starts bottoming, and then price pushes all the way lower here. So you have this divergence. Even right here, you see price pushing lower and RSI kind of forming this rounded bottom, and then it pushes up off that area right here. Okay, now we'll go even further down. We'll take it to the 5-minute. So you could play the same thing out right here. You have this low. We can even go down to the 3-minute. So you have this rounded bottom in price that was formed by the rounded bottom in RSI. And now you could, you may have a similar retracement here where you get the same fractal pattern. Now, what would we have to see to get like true confirmation of these divergences on the weekly and the daily? So all we would need to see on the weekly is for this high to be taken out. On the daily, you would just need to see this high taken out. Let's see on the 4-hour. On the 4-hour, yeah, it'd be the same high right here. So this is a situation where, again, we don't have this. It's not present in the market yet. But assuming that this area does act as support, we're obviously more likely to see the highs taken out than the lows. Assuming that price is done running for liquidity to the downside, which, I wouldn't be in this position if I didn't think it wasn't. So assuming that plays out, then this would not be an area where price, runs for liquidity and runs liquidity above the highs and then goes down quickly. This is an area where, you'd want to put your stop losses if you are short. If you are of a bearish bias, again, be very wise to manage risk at 19,999. Because again, it's very unlikely that price just runs above this level and then runs down, because at that point, if it closes above closes the daily above that level, then you're going to confirm the bullish divergence on the RSI, and you're going to get this like wedge formation where price is pushed into a corner and it's going to probably spring up. And again, same thing here. This would confirm the weekly. So I think it would kind of create a cascading effect, right? Where you've got price like coiling into the spring, and if the spring bursts upward, right, it's not going to offer you very many short opportunities. It's really, price is really going to rip and really squeeze the shit out of shorts. And a lot of people don't realize that a lot of these like violent movements in bear market rallies. I'm sure you've heard of it before. That bear markets move much more violently than bull market rallies, which are more steady and momentum building. The reason for that is the short squeeze, right? It's initiated by smart bears managing risk before other bears and closing those short positions before the liquidation engine starts doing it for them. So I do think if you are short, I do think there is a pretty legitimate basis for being short. I mean, not that I really entertain that idea, but I can see how somebody would if you're just strictly following a trend-based model, right? This technically a downtrend on the 4 hour. So again, there's different ways to skin a cat, but if you are do that, you are trading in that way. These levels are still important to keep in mind as risk management areas, right? And if price takes this level out, then it's probably going to run up. Let's see, what are the EMAs doing? Yeah, nothing really significant there. EMAs are particularly not useful during consolidation periods. What you really want to, the time when EMAs are best is when every time frame is, trending in the same direction. Basically, you have an all-out break, from the monthly, the weekly, the daily, the 4 hour, down to the 15-minute, all aligned. In those scenarios, EMAs are particularly effective. But in the scenario where, price has crashed and had a capitulation down into a major support and price is just kind of grinding it out at that level, that's not really the ideal area to really be using EMAs. Looks like price is starting to move right now. So let's see. Yeah, it's pretty nice price action leading into the weekend. I hope you guys all have a great weekend. If you guys haven't subscribed to the channel already, please subscribe, leave a like on the video below. I'll catch you guys in the next